Hi there, everybody. This is Carrie Hamblen, the CEO and president of the Las Cruces Green Chamber of Commerce, coming to you again as we continue this very series with our pals at Nusenda Credit Union. It's the Nusenda's Financial Well-being Tips. And what we're doing is we're providing you helpful financial tips on a number of topics, from budgeting and money management to boosting your credit score and what to do with your taxes and a whole lot more. And today, we're talking with Alan Fowler, who is the Senior Vice President of Mortgage Services for Nusenda Credit Union. Hey there, Alan. It's really great to see you. I'm so glad we get to do this today.
It's great to be here, Carrie. I really appreciate you inviting me.
Absolutely. So today we're talking about the things that home buyers need to know. And, we talk about we hear this all the time about a seller's market or a buyer's market. And there's some factors that kind of can, make one better than the other. And right now we're hearing it's a seller's market. Can you explain what it means when we see a seller's market for home buying?
Sure. Well, it really comes down to supply and demand. When a lot of people want to buy homes and there's not enough houses on the market, that means that sellers have an easier time selling their home. They don't have to, there's a negotiation of, for example, of who pays closing costs. And typically a seller may have to pay some closing costs in order to entice their buyer to take their listing, or maybe they drop the sales price on their house. And because of the limited number of houses for sale right now, even with the increase in interest rates, it's still considered a seller's market where they're getting pretty much what they're asking for and not having to incent their buyers as much. And they're selling their houses, quicker than normal. Normally, a seller would expect to wait a few weeks once they've listed a house to get it sold. And right now, it's shorter than that, shorter than we're used to.
Yeah, when we talk about incentivized, sometimes there's like this negotiation of like, oh, okay, well, we know as a home seller that you've got a bunch of different options, and if I want to sell my house, I might go down on the price a little bit, but that's not happening right now.
Not now. It's not quite as bad as it was, or quite as prominent as it was a few months ago when interest rates were a little bit lower, where sellers were actually sometimes getting more than what they were asking for. But right now, sellers can pretty much expect to get what they're asking for and still sell the home fairly soon because there's just a limited number of houses out there on the market.
Yeah. Well, when we often feel or hear that buying a home is probably one of the biggest investments you'll make as a person, but it's also really intimidating and can create a lot of apprehensions. And especially when I remember when I bought my house that I'm talking to you from today is talking about getting approved for a home loan and all sorts of stuff. What can people do to help ease those apprehensions if they're buying a house for the first time?
Sure. Well, and it is, and you mentioned it's the largest investment most people will ever make, and becomes a big part of their net worth when they retire, which I know a lot of 20-year-olds who are looking to buy their first home aren't thinking of that, but it sure does become important.
Yeah.
And the most important thing to do is to build the team of people you trust around you as you go through the process. Finding family and friends who have been through the process recently who can guide you. But then really finding a team of professionals to help as well. First of all, a real estate professional or a realtor who knows the market and can guide you kind of step by step. And for a buyer, sometimes they don't realize this, but that commission is paid by the seller, even though that agent is working for the buyer. So it's always important, I feel, especially in your first purchase, to work with a real estate professional. And then also find a lender that you trust. I'm a bit biased. I've been a local lender for 42 years here in New Mexico, and my dad was a lender years before. I remember coming down in the late 60s and early 70s with my dad making loans down in Las Cruces. And the trick is to find someone who you trust, who knows your market, who's going to give you a fair deal, be able to explain things to you. The financing process is one of the more complicated processes. There's so much regulation involved with it. And to have someone who can explain it to you and explain what all the fees mean, who pays what, finding someone who can guide you through that process really is important. And that's tough to do when you're talking to someone sitting in a cubicle in New Jersey or Michigan or wherever else they may be. So I'm biased towards a local person, but most important thing is that someone you trust who you feel is knowledgeable. And then finally, an insurance agent probably, it's one of the first things you need to do is to find insurance on the home. Find someone you trust or work with the agent that you currently have your car insurance with, but interview a couple of each of those, of lenders and realtors and insurance agents, and make sure you have a comfort level and you feel you can trust them.
Well, I remember the anxiety that I felt when I was buying this house is just because of all the terms and, oh my gosh, everything that I kind of needed to know. And so I'm kind of being triggered by it. I mean, thankfully, this is the house that I'm going to stay in for the rest of my life. But, some other folks, may not have that luxury. But there are terms that we have to like really kind of be comfortable with. I mean, home inspections and your APR and like what your interest rate should be and what's a good interest rate. And so what are some of those terms that people can kind of look out for when they're thinking about buying a house?
Well, you nailed a couple of them. The thing most people are most curious about is what their monthly payment will be. And so even monthly payment can have different definitions. You borrow the money and you pay it back by paying principal and interest, but then also each month that lender collects a little bit for your homeowner's insurance and a little bit for your taxes, so that when they come due next year, the lender pays those for you. So that all gets bound up in the monthly payment. So your monthly payment's a little bit bigger than just paying the principal and interest. So that's sometimes a surprise to folks. They're also usually prepared to come in with some sort of down payment, but then there's also those closing costs that we referred to earlier. And those can add up depending on how the negotiations with the seller go. And so that's some extra money that you need to have. But then there's also some good terms that you need to know, like down payment assistance. For first-time home buyers in New Mexico, there's some great down payment assistance programs that can help them come up with that down payment. There's also some really innovative programs to help people who are affected by these interest rates going up, because that really has caused payments to increase. And there's some great programs out there, but you want to be careful because there's some risk to them. So again, you want someone to be able to explain them to you. But fixed rate versus adjustable rate.
Right.
Fixed rate mortgage comes in to play today, and it's a higher rate than we've been used to the last few years. But that rate can be reduced down the road if interest rates come down. You can refinance that rate. So those are the types of things you need to know there. Some other terms that sometimes come in and surprise people are private mortgage insurance or mortgage insurance premiums. Mortgage insurance is an innovation that actually has helped create the housing economy that we have in this country, because it used to be you needed a huge down payment for a house. Mm-hmm. And now, instead of a big down payment, you buy that lender an insurance policy for that big down payment. And now you as the buyer come in with just a little bit, but you pay this insurance premium that allowed you to do that. And so that mortgage insurance premium is something that also gets added to your payment. And it's a difficult concept for some people to understand, and a difficult concept, frankly, for people in my business to explain.
Right. Well, and you talk about closing costs, and those are some of the things like, we see, a price for a house is $187,000, but the real cost winds up being a chunk more than people are expecting. And so what are those closing costs? What do those typically involve?
So the biggest ones, the lender requires an appraisal of the property, which is still protecting the buyer, making sure that they're not paying more than what a house is worth, and looking for some major defects. The inspections that you talked about earlier, where they're really digging in and looking at the condition of the appliances and the HVAC and those things. And you certainly want your air conditioning to be working, even if you're buying a house in February.
And the roof.
Sure that, the roof. So those inspections are something that you want to have. But the appraisal is a cost. Title insurance. And title insurance is a big cost that a lot of people don't really understand. But title insurance, there's a policy that covers the lender and a policy that covers the buyer. And that really is just making sure that no one can come back later and say, hey, you owe me money because I worked on the furnace, or I really own this home. I mean, that's the worst case scenario. I really own this home. You shouldn't have it. And so title insurance comes in to make sure that that doesn't happen. And so that's a cost that's negotiated. And then there's a bunch of smaller fees. They come out to do a survey. There's a credit report that's run. There's there's the processing of the loan. There's creating documents. You go close it in New Mexico. You go close the title company, and the title company also charges settlement fees. They call them the fees to close the loan. So these things, like you mentioned, they add up to pretty good sum. And right now, buyers are paying probably a little more of their share of those closing costs than they're used to.
Yeah, I remember signing the title, and it was just page upon page upon page, and after a while, it's just like you get kind of numb to it.
Yeah.
Well, one of the things that we feel really lucky that my spouse and I are able to make an extra payment. And you talked about principals and the interest, and that's really where an extra payment. So as we finish up today, once a home is purchased, what are some of those ongoing things that homeowners can kind of keep a lookout for to maybe make it a little bit easier on them financially to own their home, and paying an extra payment, and if you can explain what that does, and then
Sure.
watching for lower interest rates.
Yep. So I'll start with the second one first, because we'll keep an eye on interest rates, and we hope that they come down soon. So if you're getting a home loan today, we hope that in the next year or two that rates will come down, and you'll be able to refinance and lock into one of those lower rates. No guarantee. Rates do what rates do, and the lenders themselves don't have control over it. The markets kind of control that. But it's certainly, if you're planning on staying in that home for any considerable length of time, you pay some closing costs to refinance it again. But as long as you're lowering that interest rate by 1 to 2 percentage points, you're going to get that money back in less than 2 years, and at that point, it's worthwhile.
Yeah.
Or if you did take advantage of one of these adjustable rate loans that has a lower interest rate now, you want to fix that so that you don't have the risk of those interest rates changing in the future. You might want to refinance that adjustable rate before it adjusts. As far as making extra payments, there's several different ways to look at it, but the most important thing to know is the earlier stages in the loan that you can make those principal payments, those extra payments you're talking about go straight to principal. They pay it down, and that reduces the interest you pay over the life of the loan. The sooner you do that, the more impact it has. For example, let's say someone borrows $250,000 today. Their first payment is going to run about $1,350 worth of interest and about $225 worth of principal. So mostly you're paying interest. If you can pay let's say you get your tax return in January, your refund, and you can put $1,000 towards that house, you've just cut off 4 mortgage payments. Yep. You've just cut off $4,000 worth of interest by making $1,000 worth of principal payment. And anytime you pay principal to a loan, you're paying yourself. You're putting that money, because that's your money, that's your equity. Your equity just went up when you do that. So anytime you do that, you're paying yourself, and you're saving that interest that you're paying to the lender. And the earlier you can do it, the earlier you can get in that habit, the better. So I mentioned when you get that tax refund, that's a common time people do it. Others just make an extra $100 a month towards their payment, or $200 a month towards their payment. And if you can work that into your budget early, and if you can get those payments automatically taken out of your checking account, so you're not tempted to spend it every month, it's amazing how quickly you'll see your equity grow and the amount that goes to interest shrink, and get that thing paid off early.
Yeah, I mean, there are so many things, and that's why having that team that you had talked about of people that you trust really helps you kind of take those shortcuts that would be really helpful for you in the long run. Alan, I know we probably could talk more about this for at least another 25, 30 minutes.
Sure.
But we'll have you back, I'm sure. And so thank you so much for a great conversation about what home buyers need to know. I mean, it's really this is kind of a snapshot, really, when we look at the bigger picture,
Yeah.
right, of buying a home.
Yep.
But it's a good start, that's for sure. Our series, Nusenda's Financial Well-being Tips, will drop every second Monday of the month. And if you'd like more information on the services provided by Nusenda, you can go to nusenda.com or call our local branch here.
Nusenda.org.
Oh my goodness, nusenda.org. I will make sure I correct that. Nusenda.org, or call our local branch here at 575-523-7750, or you can go by their office at 1715 East University Avenue. And you can also find all of our financial well-being tips at locallascruces.com/Nusenda. Thanks again, Alan. I certainly appreciate your time, and I know that we're going to see either you or one of your colleagues again soon.
It's my pleasure, and I'm happy to come back whenever you'll have me.
All righty. Have a great day.
Right. Thanks a lot, everyone. Bye-bye.
Thank you. Bye-bye.